Session of Business IT Conclave, the 13th edition of the Bengal Chamber. So here we are having in conversation with Mr. Deepak Jain, co-founder Flexi Loans Technologies, with Mr. Arnab Basu, Vice President and Chairperson IT Committee of the Bengal Chamber. So we'll be hearing from them about digitizing MSME ecosystem and learning of building startups to scale. We will commence the session with a short video of one of our sponsors.
With connectivity and applications, data usage is growing exponentially. Industries are accelerating the integration of their value chain, leveraging technologies like automation with AI and analytics, massively connected resources, agility of response, and better security. Introducing Tata Communications private 5G networks, designed to deliver end-to-end flexible, robust, and programmable connectivity solution for any industry. Solution is integrated with Edge Cloud to deploy industry-grade mission-critical applications, secured enterprise connectivity and data, and deployed and managed using our global footprint. Tata Communications private 5G solution provides you with seamless, low latency, and highly reliable network, zero-touch automation and orchestration, zero trust security, optimized total cost of ownership, and on-demand scalability. With our solution, we build comprehensive use cases and innovative business solutions across industries such as smart manufacturing, warehousing, ports, digital campuses, and many more. With our in-depth domain expertise, we help you achieve the desired business outcomes. Contact Tata Communications today.
Thank you. May we request Mr. Arnab Basu to please take the discussion forward.
Thank you, Angana, and welcome everyone to this session, a discussion on digitizing the MSME ecosystem and learnings around building a startup to scale. It's my privilege to welcome Mr. Deepak Jain, who is the co-founder of Flexi Loans Technologies. And Deepak, welcome to the Business IT Conclave of Bengal Chamber of Commerce. Deepak, are you there? Yeah, thank you.
Yeah, thanks a lot, Arnab, for having us here.
Yeah, absolutely. And Deepak is, a very interesting person. And while I'll go to Deepak, but before I go to it, I definitely want to talk a bit about Flexi Loans. So Deepak has co-founded.
Hello. Is it? Arnab, can you hear me?
I think we have there's a technology gap. So, Deepak, would you please share your opening observations, and by the time I believe Arnab will join back?
Sure. So Arnab was introducing Flexi Loans for everyone. I'll start with that, maybe, for the audience. I founded Flexi Loans Technologies with, three other gentlemen back in 2016. We are a MSME digital lending fintech. We have, we focus on micro and small entrepreneurs pan-India, and we give collateral-free loans to these entrepreneurs pan-India. We operate out of one office in Mumbai, but we, backed by technology, we offer loans in some 1,600 cities pan-India. And we have disbursed roughly 50,000 loans till date, totaling to upwards of 2,000 crores. Some interesting facts there, 50% of these loans over 50% of these loans are in tier 2, tier 3 towns. Over 50% of these loans are first business loans for many of these entrepreneurs. So again, we're trying to make a real impact to entrepreneurs who were borrowing earlier from informal economy and trying to formalize them and bring to formal economy.
Very good.
Hi Arnab. So I was giving the intro because we lost you, so I said
No, no,
let me pick up
absolutely.
the intro for
Yeah.
Flexi Loans. So I've
Technology
just
always
done a
pays up
small.
when you need it, right? So
It's the Murphy's law. So it always happens.
yeah, yeah. No, and I
So
think
I've done
Deepak,
a
thanks
small
for
intro for Flexi already.
no,
Why don't
absolutely.
you?
Thanks for introducing FlexiLoan, and of course, you can do it much better than I can. But coming to Deepak himself, and I think today's conversation is not just about Flexi Loans, but also about Deepak Jain, the entrepreneur. And I think Deepak was chosen as the 40 under 40 by Fortune India in 22. So he's pretty young, as you can probably make out. But he has a quite a interesting background, if I might call it. So he did his chartered accountancy, and then post that he did a stint as a management consultant in JSW, and then he went on to do his MBA from ISB, and then after that he went into the FS space, and he was with Inam, and then he was with Axis Capital, where he was the vice president for their investment banking business. And then I think the entrepreneurial bug bit him, and he founded Flexi Loans. So, in terms of the speaker today we have for you, I think it's you would get that flavor of somebody who has probably been in the corporate world as well as done something on his own. And Deepak, maybe we'll start off with the first question, which is if you can just walk us through this journey of going into really large Indian multinationals, if I can call a JSW or an Axis, and from there to shift to the entrepreneurial journey. What made you do it, and how was the initial views on that, and then we can probably go from there.
Sure. Thank you, Arnab, for that kind introduction. So there is some part of this intro which is missed, and I'll start with that. So I'm born as an entrepreneur, and I'm born in a Marwadi jeweler family, right? So have seen entrepreneurship very, very closely as I grew up. My father also had a loan against gold business, so may have given my first loan without realizing that I'll become a banker, maybe when I was in class 7 or class 8. So entrepreneurship came pretty early for me. Some of the lessons of entrepreneurship from knowing the basics, etc., started, in early teens. So thus it was extremely helpful. In fact, many of those lessons, from knowing your customer to knowing basics of your of your business model to knowing each and every employee very well. Many of those things were taught by my father and my uncles, etc., and stayed with me for a long period of time. Obviously, then was fortunate to work with some amazing people in almost a decade of my corporate experience, and it was a great journey. So and they were extremely instrumental in what we have built, or what I have tried and built at Flexi Loans. So I started as in the management consulting team, or in-house management consulting team of JSW, and I was working very, very closely with the then vice chairman, Mr. N.K. Jain, and so and the entire team there. What we did was, we used to pick up a business or a business vertical and go and do a very, very deep dive into each of these business verticals. Given we were in-house team, a lot of data came to us which may not go to external consultants, and then we'll deep dive and make case studies working with the managers, right? So every manager or the CEO of a plant would want the best efficiency, and would want to drive that. But if there is a consulting team helping him do that, he'll open up more and he'll help drive things. So that started a very amazing journey of knowing entrepreneurs within the firm who used to drive their business respective verticals, and it was a great journey for me. Got excited about investment banking because we used to meet a lot of bankers at in this role. Went to ISB for that. and joined investment banking, in Lehman years. It was very difficult to get it, but I went to ISB to ensure that I go into investment banking, and I somehow cracked it. Uh, the whole investment banking journey, which started with Inam and eventually became Axis Capital, was very good because it allowed me to work with multiple entrepreneurs in multiple sectors. And in that journey, was fortunate to, again, learn from many bankers. So would have helped at least 10 or 12 financial institutions. I've not named them here, but many of them raise public markets or private markets funding, and thus understanding, what they did, how they did, etc., etc. As and when that was happening, that something which, my father had told me long back, always stayed with me, that if you want to really create a big impact, become your own master, and try and do that, because that's when you can drive your destiny in a big manner. So that intention was always there, and I kept somehow a benchmark for me that before 35 I'll quit and start something of my own. So was again lucky enough to find a group of friends who also wanted to do entrepreneurship. It's very difficult to form a tech company on your own. You can start a dhanda, as we call it, on your own, and scale it to a certain level. And then obviously, if it's a large family, then you bring people and scale, take the family business to the next level. But if you want to create a corporate to begin with and rise at a much faster pace or scale it at a much faster pace, you need good co-founders with complementary experiences and not exactly same experiences as yours, which is what I found in Ritesh, Manish, and Abhishek, and started Flexi. So the bug came because it was always there, and it never left me actually. Even when I was training myself at Axis or at JSW, the agenda of all those training was to eventually start something of my own and learn in that phase, and thus chose the consulting job where I understood the businesses, and then investment banking where I was allowed to work with multiple entrepreneurs, which allowed me to work with multiple entrepreneurs the way you do, Arnab, at PwC, right? It allows you to work with so many different entrepreneurs, and then eventually, if you want to start something of your own, it's always a great platform.
Lovely, and I think Deepak, you mentioned a very critical point that some of these things you can't do alone, and while you need a few people to come together and bring in complementary skills. So tell us about it, that when you try to set up the initial team and the initial foundational piece of your business, how did you look at these skill sets, or how many people you need, who would come in, who would do what, that part? And secondly, what made you move into this MSME space of non-collateral based lending? And I know that you have probably more than 200 crores of lending done over your platform, but in terms of the overall risk of lending without collateral in India, some of the thoughts which went in your mind.
Sure. Just a correction, we have done over 2,000 crores of lending on our platform.
Sorry, I meant 2,000. Sorry. Yeah.
Now, see, going to first the team, and the team, the way we chose the team, was more friendship first, and that defines the entire culture at Flexi Loans as well, to a lot extent. People may still move on, many people may still move on, but we always continue to stay friends. So it's a company started by friends, and we try and create a very, very friendly culture, within the teams as well. Now, obviously, the luck was on our side when we were, between the friends, when we decided that we'll start something. It was friends first chosen and not partners first. So it was not chosen that ये skill set है इसलिए friends बना लेते हैं. It was friends first, but that's where we got lucky. That see, I was a investment banker and consultant. Manish had actual NBFC execution experience. Ritesh was finance and technology from housing.com, etc. Abhishek was data science from his various experiences. So this is again, to some extent, Universe brought this together because the skills are extremely complementary. And for example, Ritesh managed pretty large teams in his past, and those functions like operations, finance, sales went to him. I would do all the external work in my role, so things like fundraising, debt or equity or alliances all came to me naturally. Manish, because he had done execution of modeling, risk modeling, etc., and then corporate M&A. So legal, compliance, credit, collections went to him naturally. Data science and policy and product went to Abhishek, and so the first level of team was the work role was divided between us. Very critically enough, what we did was we decided that okay, between four of us, given we are already four senior guys, what is that key risk which is still missing, or key role gap which is missing in creating the large organization, and the first in that gap. So, for example, none of us was a CRO. And we brought the first senior hiring was a CRO person. Yeah. Uh, and that's how we go about it. When the company was self-funded, because we had enough and more, like almost 60 years of corporate experience with us, between four of us, we worked with a team of 20 interns, and we created using our own funds, we created a very good POC. So it had a proper technology LOS LMS layers to enough partnerships, to enough loans, etc. were booked, and then we went and did the fundraise. Yeah. In hiring, it's always like that. We prioritize that what skills are missing at any scale in the organization, which are very critical for next 2 years of scale, and that's how we bring people, and see whether that work can be done by any one of us first. Can we double hack and keep doing that, to keep our costs obviously low. But once we see that okay, now the workload in one of us is very high, and we need to offload it by bringing somebody senior in this position, we bring. And middle layer and junior level obviously keep happening, because we hired a lot of freshers. Most of them are middle managers today. So at middle managers, we don't need to hire a lot, because a lot of freshers have scaled into middle managers automatically, and many of them will eventually become senior managers and so on and so forth. Yeah. I hope that answers on the hiring of skill sets. Anab, you're on mute if you speak.
Sorry. No, absolutely. And the other thing I wanted to ask you was that you have subsequently been an angel investor in other startups, and you've been looking at other entrepreneurial ventures where you tend to, probably come in as an investor in some of them. When you look at today's, startup ecosystem, you're considering a few, and from whatever is there in the public domain, I can see that it's quite a wide variety, and it's not really related to only your area of expertise, if I might call it. How do you decide on them, and what do you look for in some of these new ventures?
Yeah. So again, a good question. See, initially we got funded, and if you look at our history, we raised 100 crores of seed capital. It was one of the largest seed capital rounds in Asia, probably at that point in time. But what was more critical is the kind of people it came from. So they were very relevant set of bankers, the likes of Sanjay Nair, who was City banker before, and then CEO for KKR, or Mr. Puneet Chadha from Deutsche Bank, Asia Pac CEO, or Mr. Anand Jagia was CIO of HDFC Bank, and so on and so forth. We had a fantastic set of bankers who somehow all came together and supported our venture. So the first thing which I always look at when I'm trying to back a venture is, can I add some value here beyond money? If the answer is no, I'll never touch it. Yeah. If the answer is yes, only then I'll try and invest. Also, because a lot of the wealth which I've generated in the past 5 years came from my startup, I try and the agenda of startup investing is not just wealth creation. The agenda of that, for me personally, is also to some extent give back to the ecosystem. So I may have invested in X number of startups, but maybe X into 3 is what are the number of startups I try and advise and mentor and guide. So on and so forth. Yeah. So uh, so whether I can add value and how much I can give back to that startup is definitely number one. The second principle when I'm writing the check, obviously, because we are all like while I'm second generation entrepreneur, but I kind of came from middle class background. So money, every money spent is very critical. So thus we'll always look at how big is the size of the market and how trained are entrepreneurs. For me, honestly, size of the market and the quality and pedigree of entrepreneurs are the two most important things, which I'll put weightage on. Most of the checks I have written are at seed stage, where we are with the first check for the entrepreneur. So thus, it is just that okay, whether the entrepreneur has it in him or her to make it, and whether the market is big enough if the person cracks the code. Yeah. These two answers are yes. I may write a check. After that, I have tried to be as passive from my side as possible. So I'll always stay passive only when entrepreneur needs me. So while it's dichotomy that from the point I said earlier that I would like to add value for each entrepreneur, but I leave to that entrepreneur to come to me versus me always going to him and trying to help, because see, it's his or her business, and he's the best suited person to drive that. So I will not go in and try and guide or folks say that okay, you should do this and versus that. Obviously, if I come across something interesting for that set of entrepreneurs, I'll always be highlighted to them. But from my side, the agenda is to advise and guide them only when they need it versus me wanting to advise and guide them or help them with my network.
No, thank you, Deepak, and I think that's really, you laid it out very nicely that you invest in businesses which you understand or you can add value. You obviously look at what you're giving back to the society, but then also look at the hunger of the entrepreneur, the quality of the entrepreneur, and of course the size of the market. So really great points. Coming back to the point which you talked about, just tell us about some of the learnings you had when you tried to raise capital. And all that you said about yourself as an investor, was that true when you went to people with private equity experience or with experience of being part of very large organizations? What was your capital raising experience and learnings from that?
So luckily things have changed now. Angel investing is much more popular. People are more amenable to talk to, and think of, say, a less than 10% stake for a sizable check and so on and so forth. At least when we started the process, I would have met so many first generation or second generation entrepreneurs coming from big families where they will say that, okay, we'll put 5 crores or 10 crores and, we are equal partners. You guys run the business and we are the capital guys. So that mindset existed in a lot of family-backed entrepreneurs. Fortunately, that has changed, and rightfully so. With a lot of tech co-founders now writing the first check, that's again a brilliant thing, right? Because we can, to some extent, guide through the journeys what we came through and so on and so forth, right? The second thing which I saw was, there will be, if the market, if you're not the first tech company in that solutioning, the associates may not understand your skill set fully, still may say that, the space is pretty crowded and you may not survive. So let the rejections not decide your fate. I can now say publicly, given we've been funded multiple times now, that we were also rejected multiple times, and it's okay. It's okay by people saying, because it's their point of view at a point in time, and many of them now have told me publicly or openly that they regret that they passed. So it's fine, right? And that will keep happening. But one learning which, I will always, the biggest thing which worked for us was talking to your network regularly. So we kind of created a newsletter pretty early in our journey and kept sharing that with potential investors which we thought may like it. And we got a lot of reverse inquiries from those lists. Some of them kept following up, and as they saw the progress, the checks came in. In fact, of the 3 rounds of funding we have done, 2 happened in this manner. So newsletters and informing the relevant target TG regularly does help. And, I would strongly urge entrepreneurs to keep doing that. And don't be transactional with your network, go and meet genuinely to educate people and try and explain things, at some point in time, things will work out and the network will pay off well.
Thank you. A question which has come from the audience, that you are a company which provides collateral-free loan. So how do you hedge the risk without knowing their credit history? And, is there extensive documentation which is required for MSMEs? And, your thoughts on that?
Yeah. So again, the philosophy, for credit and if you speak to any banker, there are 2 things which any banker in India has historically been trying to judge, right? One is the ability to pay, and the second is willingness to pay. Credit history only guides the bankers from the willingness to pay angle, right? And whether they have enough loan tracks where they've taken the loans and given money back. Now, not having a loan track cannot be a negative to begin with. And thus, it allows an experiment which can be done for people with decent ability to pay back the loans. So given our ticket sizes of loans are not pretty high, our average ticket size of loans is around 5 lakh rupees. So where people with high ability to pay, even if they may not have a loan track, we will give them a loan. We also need to understand the risk profile better from other perspective as well. So and look at multiple things, like, for example, how long this entrepreneur has been staying at the same place for doing the business from the same city, and so on and so forth. Vintage curve of the city is very important if the credit history does not exist. Yeah. As I said, most of these entrepreneurs, for their working capital needs, because they were like 3 lakh to 7 lakh rupees, they would borrow it from friends and families, which was very evident in say 15 years back. Most people would borrow from friends and families in the local community, or most of these guys will borrow from local money lenders because they don't want to go to their CA and prepare a large paper documentation and apply for a loan. Fintechs have changed that, and thus now doing loans at few clicks and few buttons is easy. Obviously, government has created a large ecosystem of Jandan ecosystem where you can also submit your data with few clicks. So all of this is helping, and the way next 10 years will see a massive change. People think that it's already changed. I would say next 10 years, we'll all be surprised the amount of digitalization which will happen in this country. All models will go into digitalization. It has to happen. There is no other way. We have seen it across sectors in the developed economy. In India, India has been pioneer in cheap data as well as amazing payments ecosystem. I'm pretty sure in lending also, everything will happen digitally within 10 years.
No, lovely. And I think I completely agree with you, Deepak, that probably the startup movement that we see today, it will become far more deep-rooted in our Indian, ecosystem going forward. And it has the ability to change the landscape of India, economic landscape of India very significantly, and hopefully also have a much broader impact at a global level. So Deepak, again, thanks for your time. I know that you have another meeting right after this, but any final, guidance from you for all the budding entrepreneurs on the call as we sign off on this session.
So there is a lot of negativity in the market. Let me bring. There's a lot of negativity in the market. Been spoken that there's a massive winter which is coming, and recession which is happening, etc., etc. Guys, this is all true, not for India. It's more for Western world. So India as a demographics, our demographics are just amazing. We are. I heard a phrase somewhere. We are ridiculously young country. So our demographics are in favor for next 2 decades, and we have to make most of it. And I'm like super optimistic, and like most other entrepreneurs are, that next 2 decades are for big entrepreneurship, or many big entrepreneurs to come from our country. And we'll keep growing upwards of 7%, which is again massive, right? On the base we are already in. So in 10 years, this economy is going bazooka. And if you are in India, stay in India. This is the best place to be in for this decade, for sure. So don't worry about the funding winter. Don't worry about any of the recessionary things. Obviously, plan your entrepreneurships, move well, focus on right unit economics, etc. But all the tailwinds which existed a couple of months back, they'll all come back. So don't worry about it too much.
Thank you, Deepak. On that note of keeping the faith and staying invested in India, lovely talking to you, Deepak, and thanks once again for a lovely discourse. I'm sure the audience, which has many budding entrepreneurs, would have found it super useful. Thanks again for making time for us. Thank you.
Thank
Deepak.
you, Arnab. It was fantastic talking to you as well. Look forward in catching you.
Thank you, Mr. Deepak Jain and Mr. Arnab Basu. So we are closing this session here. So the next session is Demystifying Metaverse, will be presented by Zensar, and we will start the next session in just 2 minutes. Stay with us. Thank you. So we are running, I think, 5 minutes behind schedule.